How does this look to y'all? Can y'all see the chart?
Do I need to go to see the chart?
Can y'all see it? Y'all see my screen? Let me see
Uh-uh.
something. Hold on.
Yes.
One second, y'all. I'm gonna join on my phone so I can see what it looks like because I'm on my other monitor, my other curve monitor. So sometimes it be looking funny. Okay, well it looks fine to me. One second. Let's see if I can turn my audio off. Okay, cool. So it looks fine to me. All right, so I know someone said like a top down, like top to entry analysis. So basically what we call that is a top down analysis. Let me see the chat. So just do analysis, gold, silver. I'm in the sell from the CPI high. Got in after the CPI high, took the sell at your trend line. Crazy entry, phenomenal entry. So just to kind of go off of what we were talking about, um, can't see my screen. I should be sharing it. I should be sharing my screen. So you should be able to just click on like when you click on the Zoom.
Yeah, we see your screen.
Okay, cool, cool, cool. All right. So based off of, y'all we're talking about gold and everything. What I'm gonna do is I'm just gonna go to the daily time frame and looking at gold off the daily aspect, most people can, will pretty much say, oh, this thing is kind of bullish and everything, whatnot. But looking at this, we can obviously see that gold has been trending up, but right now we can definitely say since the beginning of January, the beginning of this year, gold has literally been going down. So you can see you have a high here, this low, this lower high, this lower low, lower high, and then you've been getting this little, high, low, lower high, lower low, lower high, low. You've been getting all these lower lows. So gold has pretty much been trending down for a while since the beginning of January. So I'm pretty sure it's safe to say that gold is kind of bearish at this moment, right? So what I'm going to do, right, as far as a top-down analysis, guys, I'm gonna give you that. I don't want to skip anything. I'll come back to this chart. But let me give you guys a fresh chart. So that way we can work off of that. So this is a fresh chart that I haven't really marked up. So let's backtrack a little bit. So basically, no, this is not fresh. Wait a minute. All right, here we go. So basically, what I like to do when it comes to like a top-down analysis or just trying to figure out what's going on with the chart, I know a lot of people on yesterday's call were saying how, on these calls it's kind of easy when I'm doing it, but when you're doing it, it's very confusing. You're not sure where to start or you can get confused. Guys, at times I get confused with the market, but the thing is, I want to try to make this as easy as possible for myself and for all of you guys. So looking at this can be a little intimidating. It can be a little confusing because you kind of don't know where to start. But on tonight's call, I'm gonna show you exactly where you should be starting and where you should be looking at. All right. So in the beginning, right, when you first pull up a chart, it don't matter what currency pair you're looking at. Right now, we're looking at XAU USD, which is gold. But any currency pair, what you want to do, right? This applies to every single currency, right? You kind of want to figure out where is current market, and current market is literally the current candle that price is currently forming, right? If you're trying to find that out, it's literally sitting right here. This candlestick hasn't closed. This candlestick is currently, you know, creating itself or whatever you want to call it. This is the current market. That is current market price. So what you want to do there, literally, is draw a line there, so you can know, okay, this is where I am. Now, the next thing you kind of want to ask yourself, your main focus, right? I'm gonna just ask y'all this because I want to see if everybody know this basic knowledge about market structure. I'm gonna draw a trend on this chart. You guys tell me what type of trend it is, okay? So I'm gonna start, and you guys tell me what you're seeing, what type of trend this is.
Downtrend.
Downtrend.
Downtrend. All right. In a downtrend, what type of highs and lows do you get?
Low high, low low.
Lower high, lower low. Perfect. Now that's what you want to focus in on. Now I want to show you guys something. We can easily see here. I'm gonna put an eclipse on these so you guys can see. We can easily see that these are highs and these are lows. Everybody agree with me on that? We can
Yes.
okay. Okay, perfect. Now I want you guys to also see that this is where a lot of people get confused. The chart doesn't look this clean, right? You get some bullcrap mess where it kind of looks like this, and it gets very confusing to figure out, oh, which high, which low do I pay attention to? Can everybody agree with me on that? Because right here
Yeah.
we have a
Yes,
full high and we have a full low.
Yes.
Right here we have a full high and we have a full low. But looking at all of this can be very confusing, right? So what I want you guys to focus in on is the major highs and major lows, right? And what I mean by that is you only want to focus on at least, I say four at the most when you're on your higher time frame, right? And the way to do that, literally, right, we can easily see how the market kind of pivots when it gets to certain areas, like came here, pivot down, came here, pivot down. So when you're looking at these areas, you don't have to look inside of all of this mess right here. You need to pay attention to where the market pivots. So as you see, current price is here. If you move up, you see market came here, went down. So you just traveling to the left to see where your highs and lows are. So if we starting here, we just travel. We went up here, then we came down. So starting here, right, is the area where that is a some type of high. We come down here, this is some type of low. We come from right here, we go all the way up here. You see how market came here and stopped? Market came all the way down here and stopped. So basically, this is what you're kind of want to look like, what you want to focus in on. You want to find out where current price is, and you want to travel to where you're seeing those pivot points or those areas where market kind of has like a huge correct, not even correction, but like some type of rejection to where it changes direction for some reason. So from here, we were going, you know what I'm saying? Market went up, went down, went up, went down, went up. Right here, you don't have like a true low or whatever. So you don't even have to deal with all of this little bitty high in this case, right? Because you didn't have from here, you went drastically down here. So you could literally use that one to say I came up here and went straight down here, right? But then if you look down here, you don't really have too much of a low to go with. So what I typically would do is when it gets confusing like that, I don't even allow myself to get that confused. I just say, okay, here's another high, and then from there we created this dip down here. Here's another one. Here's another one. Here's another one. All right. That's kind of how I look at it, right? And me looking at this, I can easily tell what type of trend this is, right? I can easily see. Let me not forget this here. Let's go ahead and finish it here and here. So looking at this, I can easily tell what type of trend this is. Can y'all tell me what type of trend this is from these little circles I have up here?
Downtrend.
Downtrend. That's how you get the confusion out of your head already. If you look and see that when you draw your circles and you're seeing, oh, well, I have all these circles here, the market look like it's going down. If I'm all the way, if market started all the way up here and I ended here, obviously I'm going downward. This is January 2026. Market has been going down and it's now July 15th, 2026. So almost for the whole year has been trending down. So that right there cancels out, oh, I need to think about buys. No, you're seeing the market giving you high, low, lower high, lower low, lower high, cool little higher low right here. But then what? Lower high. And then you got this here, lower low, lower high, lower low, lower high. Like that's how you want to clear up that confusion for yourself. All right. So once you clear that confusion and you already stuck on, okay, this is going downward. I'm seeing a downtrend. You can remove all of that noise now. And now your major focus should be the major moves that you see, that the bigger shifts of the market, which are here at this area. Market came here and dropped drastically. Market came here and then dropped drastically.
Mhm.
Market came here and then dropped drastically. All right. So now you only have a few points that you can easily see. Okay, market's been dropping from here. And I'm seeing a downtrend. What I'm going to do now is I'm literally going to draw this little array that I use. Now up here, it's a little bit like it's not really giving me too many touches in this area because you see how came here, went down, came and touched this trend line again. And we came here and then we didn't touch it. Now
Mhm.
I need to make sure that my trend line gives me multiple touches. Right. This is a correct trend line because market can easily eventually come back up here. You know what I'm saying? Market can do whatever it chooses to do. you know what I'm saying, and then decide to touch that trend line and go down again, that doesn't mean that that trend line is wrong, but I need to get as close as possible to market. All right. So in order for me to even do that, right, and this is exactly what I do, what I like to do, and this is how I do it, right? I know that current market is right here, right? I'm going to easily just draw a support here, resistance here, resistance here, and then a resistance here. All right. So based off of this right here, I'm already knowing I'm in a downtrend. I know these are lower highs, right? I want to scale down. I didn't necessarily scale down. I'm not even necessarily scale down yet. What I want you guys to just understand is these little lines that I'm drawing. I'm just trying to help you get an idea of the market or pay attention to the market or even figure out how to start somewhere on the market. Like this is what you can do on a daily time frame to figure out what the market is actually trying to do, right? So based off of this, we can easily see that we're getting lower
I have
highs.
a
We can
question.
easily see. Go ahead. Somebody got a question? Oh, I thought someone had a
Yeah,
question.
yeah. So, so do you ever catch the market going down? You make profit as the market goes down as well?
Say that one more time.
Make profit, um, like with the market going down.
Yes.
Do you ever put it big because the market going down make money as well? Correct.
Yeah. So with forex, you can make money when the market is selling, and you can make money when the market is buying.
Correct.
Did,
Correct.
did that kind of answer your question?
Yes. Yes. Yes.
Oh, okay, perfect. So yeah, so you can make money both ways with trading forex. With stocks, you can only make money when the market is going up. All right. So based off of this, I want to start where I
Gotcha.
started from. But looking at this, like I said, this is a straight downtrend. You're getting lower highs, lower lows, and you can easily see that market is giving you lower highs. So if you're seeing lower highs and you're seeing the market going in a downward trend, there's no reason for you to really be looking for buys, if we're being honest. All right. And this is the daily, right? So based off the daily, I'm only looking for a few things. I'm only looking for the major, the previous high, the previous low, and then the most recent. So the most recent high, most recent low, and then the previous high and previous low, just to make sure I'm having an understanding of what the market is truly doing. So I did all that to just show you guys this is kind of how you get a understanding of what direction the market is going in. And literally just based off of here, the only thing I'm really going to focus on is this, this, and this. So I have my 4 points. After that, I'm going straight to the 4 hour time frame. And based off the 4 hour time frame, this is kind of where we kicking it at. Oh, sorry. This is kind of where we kicking it at for me. All right. We already had the daily going on. All right. We can easily see what our trend line is looking like because we already did it on the daily. And there it goes. It's basically the trend line that we got going. All right. From here, here, and here. These are all my touches that I have on this trend line. All right. If I go back to the daily just to give you guys a better understanding, if I was to say, hey, I think this is bullish today, all right, we can draw this trend line. We can easily see how market kind of, let's move it up a little bit. How market kind of, let's put it here, because that's the last pretty much touch we got. But we can easily see how market created higher low, higher high, higher low, lower high, and then the lower low, right? So that invalidates this upward trend, right? And then from there, we got high, low, lower high, all right? So now our focuses are literally this right here. So that's how I kind of got into this part. I kind of skipped a step. But this right here shows you the upward trend. This shows you the break of this last higher low that you got and a retracement of the trend line that it broke out from. And from there, it's pretty much ball game, right? Instead of this downward trend, you're kind of going with this. I mean, this upward trend, you're kind of going, kind of going with this. Let's pull this all the way up. You're kind of going with this little downward trend that the market is kind of giving you, right? And we're no longer focusing in on this right here. Trying not to put too much on the chart, but I gotta make sure you guys kind of following how I'm getting this stuff. I'm not just making it up. So based off of that, right, I could drag it right here, but just understand that trend lines are drawn by us. Like we make these trend lines and they're not going to be picture perfect. I want you to understand that. But these lower highs on this chart are not drawn by us. This is the market. So we can easily see that, you know what I'm saying, we have a multiple touches here. But basically, right, when we saw this Friday, right, or in any case, this was really the trade that we were looking at. We noticed that market had so this high is this low, right? From this high, this low. You guys can easily see when we place that Fibonacci, right? Instantly 61.8 retracement. Look, created a lower high, then created a lower low. Now, based off of that, right, this is the move that we were looking at last week, right here. From this Fibonacci retracement, from that low, from that lower high to this lower low, right? This is what we were looking at. And let's move this up anyways a little bit because kind of basing it right off of that. All right, perfect. So from this high, right, as y'all can see,
Hmm.
this high, this low, this lower high, this lower low. The next thing we were looking for was a retracement up to our area of interest. All right. So from there, right, I went from the daily to the 4 hour. I showed you on the daily time frame. You know what I'm saying? The break of the uptrend, the break of structure here, of the break below the downtrend, which was the break of structure that happened here, the lower high that was created, and then you saw market started giving you lower highs and lower lows. When we came to current price last week, right, when we seen it, before all of this happened, right, before all of this happened, this is kind of where we were. This is July 3rd, right? This is July 3rd. So we seen all of this going, right? We seen all of this happening. So once it got here, I think, let me give y'all a current day for where we were focusing on, because this is July 3rd. So that right there already gave us another lower high. All right, so that's done deal. Now let's go back to Friday. Sorry, one thing. Go back to Friday. So don't forget, like I'm still looking at a downtrend. Like I'm only looking for sales, basically. Like I want y'all to understand that. Like if you're if the market is trending in a downward trend, you only need to be looking for sales. Don't worry about the retracement. Like don't worry about market stopped here and then came all the way up here. We're not worried about that. We're waiting for market to get to us so we can get in the trade. Just like we worry about market to get to us, then we can get in the trade again. But I want to show you guys Friday, last Friday. All right, perfect. Here we go. So in this case, right, if we're looking at market from this point of view, which is Friday, this is pretty much what we're looking at. So we understand that from this high to this low, we were looking for a retracement to happen in this area right here. Right. So as soon as that retracement pretty much happens, right, if we're selling or we're looking to catch a sale, we understand that based off of this and here, from this high to this low, we need market to retrace. So let's just start this fib again. Right. Start this fib again. So we need market to retrace and give us what we're looking for. The thing is this, off the 4 hour time frame or off the daily, whatever you choose, like we really can do a fib off the daily or the 4 hour time frame. As long as you're going with the right trend, you can get it off of whichever time frame. You just make sure that you're following the market. So we can easily see, oh, sorry. We can easily see the market kind of create a low here, high here, higher low, higher high, a nice little retracement back into this area. You can call it a higher low if you choose. Higher low, higher high, right? And then the next thing you see here, pretty much like a little higher low and then a lower high. So basically, market started to change a little bit once we broke out right here because we were trending up and then we ended up breaking right below this big candle right here. So this now informs us or tells us that the market is no longer trading up. The market is now trying to reverse back in our overall direction. So when me and Mino seeing this, it's crazy how Mino, I ain't gonna cap, bro. I feel like we should have called this because we were on the same fucking page. I gotta admit, I feel like we should have came together and said, I think what we did was we followed our procedure, like our standard order procedures, bro, and we literally stuck to what our rules were. But I think this trade was just so like we was just so like on point with this shit that we should have just said, you know what? we gonna have to break the rules just this one time. But I kind of like the fact that we did stick to our rules. But then again, I kind of hate that we did because it's like this was a banger ass trade and we both saw the same thing. And when we both see the same thing, bro, it's like fucking magic. I'm not even gonna lie. Um, but either way, man. So based off of this right here, y'all, once you see that the market has retraced back to our area of interest, the only thing that you're waiting for now is market to break this upward trend line or this upward retracement. The same thing with this, man. Once market kind of breaks this upward trend line or this nice little retracement, guys, you need to be looking to take your sale because this lets you know when it's ready to actually take it, right? Like I said, we don't care about the retracement, right? You need to know like once the retracement is done and then you get a nice little breakout from the trend line, it's time for you to take your sale. Same thing in this case. We know that we were looking for a market to retrace from this move here and give you this move. I think what really got me right here is we didn't break this, and that kind of set it for me. But coming right here, creating this lower high, and then creating this, in my opinion, this is a lower low. If I go to the 1 hour time frame, which is when I draw this retracement trend line, I can see how we were getting higher low, higher low, higher low, higher low, higher low, higher low, and then we started shifting a little bit right here, right? We started after we got this higher low, we started shifting a little bit. I call this um a little bit of consolidation, right? So I gotta see a little bit of consolidation, and then you got a nice little breakout, and that's not even where we even look to take the sale for real, right? Because we want to still see market retrace and give us that entry that we're looking for. So based off of this little move that market was given, all we did here in this case, right? All we did in this case, and I think the trade was more so set up like this from this high to this low, right? This pretty much how I did it. From this high to this low, this is pretty much what we were looking for to get our entry in, right? So I say Friday morning. Let me see. Let me go to I'm on the 1 hour. Let's take some of this stuff off. I don't want to do too many fibs up here, but this is kind of like how I kind of like get like a precise entry. But either way, we know market has already broken down below this area. Let's move this too. 'Cause this kind of gives us everything we need. All right. After we got the breakout of this trend line, only thing you need to wait for is a retracement back into where it broke out from. And what I mean by that is you see market creating this high, I mean, create this high, low, lower high, lower low, lower high, lower low, lower high, lower low. Now, once you get that break of this trend line, you really want to see markets just retrace. My area of interest, I don't know if you guys know this or not, but this is the only thing I cared about. Seeing this high, this low, this lower high, and this lower low, that's all that mattered to me. Because basically from there, really from there, all I was waiting for is I went from this high to this low, and I just want, let me slide this up. I really just wanted to see market retrace back into this fair value gap, retrace back into this area right here, trace back into this area. But the most important thing is I wanted to wait for some type of liquidity sweep, and the liquidity sweep had to happen at this. I literally told you guys that when I sent the text in the chat Friday. I said we need to get a breaker structure, right? We need to get a liquidity sweep, right? No, we need to get a liquidity sweep. We get a breaker structure. Hold on, what did I say first? I'm sorry. Like I said, liquidity sweep, no breaker structure, liquidity sweep, inverse fair value gap, and then take it down, pretty much, right? So breaker structure happened here. The next thing I wanted to see market do is give me like some type of liquidity sweep of a lower high, just so I know, okay, once I get a sweep of a high and I get a rejection, I can take the sell, right? So Friday, right? Friday. Let's skip Friday when we were looking at it. Let this play out a little bit. Okay, cool, cool. So right in this area, that's Thursday, right? I'm looking to target. I think we sold our sale was basically kind of based off of this right here. This move right here. Move this up because I think I had like a 150 pip stop loss or something. So that means like entry might have been a little bit higher than this right here, possibly somewhere like up here because I was expecting market to kind of like sweep. I think I had it right above this area. So I really wanted to see market kind of sweep above this high, if I'm not mistaken. only because like I already got the break of structure and I'm waiting for the market to just sweep uh some type of high in this area. So I know that liquidity has been taken out. And once liquidity has been taken out, I feel more comfortable to get in the trade because I know that I'm getting in with the actual momentum of the market. So let's kind of see how market kind of did this thing here. All right. So based off of this right here, let's zoom into this part right here. Take this off. I got a lot on my chart, but this is kind of like trying to figure out, and this is the 1 hour time frame. Like I'm looking for entries off of this. But right here, guys, what I meant by the sweep was I needed to see market come a little bit higher than this high. Let's put a line here. All right. So based off of that, that's what I needed to see. I needed to see market kind of come up a little bit higher than this area, right? A little bit higher than that. This is kind of like that sweep that I was looking for. So in this case, we got a break of structure, we got a liquidity sweep, and we were still getting like higher highs and higher lows off of this retracement right here, right? So after that liquidity sweep, and we seen market kind of do what it was going to do, we went ahead and I think we ended up entering this trade. I don't know if we was talking about it right here, but I think I actually entered this trade literally right at the top of here. Right after we got this sweep and the market came back down and retraced back into this gap. This is where I kind of entered this trade at. And literally, the trade really went and just smashed like I take profit. Like literally smashed, I take profit. Literally. And that's literally like when you look at it, guys, you see why we entered the 61.8. Like we entered the 61.8 for a reason because you see market came right to the 61.8 and dropped down. But the thing is, you have to like really pay attention to what the market is doing. Like you can't just get in because you think, oh, I think this is the right area to get in. Just like we saw this market moving up and creating this um these higher lows and whatnot. Market ended up breaking down below. We already know once market creates a new low, what's the next thing that it has to create, guys? It has to create in a downtrend. If market creates a low, what's the next thing it's creating? Who knows?
Lower.
Lower high. So right here, we ended up creating an equal high. We ended up creating an equal high, and we ended up going a little bit above it. That's all I needed to see. Once I saw that, I said, that's perfect. We got a high here, we got a low here, lower high, lower low, and then we came right back here and closed below or created an equal high. I already knew once I seen that and I seen this kind of close like this, I said, all right, bet. If market closed like this with a nice bearish engulfing, nice little order block or whatever you want to call it, I'm looking to get right back in at this area, breakout retracement back to this area, and I'll take the sell down. I think this is one of the most precise entries that I've had on the trade, right? And all we had to do is just follow a system from the 61.8 to the 0%. The market didn't necessarily come to the negative 27%. But again, guys, I just asked y'all, if the market creates a lower low, it someone said it creates a lower high. So if market creates a lower low than a lower high, what's the next thing we create?
Low, low.
Lower low. After market creates a lower low, guys, what's the next thing market is going to create?
Lower high again.
Lower high again. So when CPI came out or the market did its thing on today, all it did really, guys, was create another what?
Lower, low, lower high, sir.
Lower high. Y'all see that? Another lower high. So instead of, like I said, like I saw the buy, right? But just because I saw the buy, that wasn't the best thing to do because seeing the buy here, yeah, market kind of came up, gave it a nice little buy, but all it was, guys, was a retracement. I want y'all to see something. Like when you trade with the trend, bro, you can catch your moves all day long until the trend is done, right? So from this high, this low, this lower high, this lower low, this lower high, this lower low, check this out. From this lower high, right? Because this is a lower high, this is a lower high, whatever you guys want to consider it to be. But I would say from this lower high, this lower low, this lower high, this lower low. So from here to here, if we draw that Fibonacci retracement on our new, let's just put it down. Draw our Fibonacci retracement. Y'all see Y'all see how this thing plays out? Because we would have been entering this trade. This is what I mean why I should have called this sell for y'all. Like I said, work was extremely busy for me. I wasn't even able to, what I'm saying, get into that, but I was hoping some of you guys seen that. But literally looking at this, man, I want you guys to see something. From this high, from this lower high to this lower low. If you know market just created a lower low, the next thing you should be looking for is a lower high. It gave it to us this morning. I also feel like it closed the gap. Let me see what time frame does it show, because I feel like it's not even showing it anymore. If the gap already been filled, it's not going to show like a gap. Could have sworn market created a crazy gap or something like right in this area. But either way, oh, here it goes. Wait, it's not showing it. Let's see if it's showing on the weekly or something. On the daily. Well, we all know that market kind of gave us a gap on when the market opened on Sunday. We saw it, right? I'm pretty sure everybody saw it. The market had like a crazy gap somewhere in this area. Somewhere in this area. Market had a gap. We know that. Um, but based off of this, man, same thing applies. Like guys, lower it's a lower high right here, lower high right here as well, lower low, and then market came and retraced. I would even, me personally, I would even say this right here is really what I was looking for. This is what I would say. But the actual lower high is truly here, and then this is the lower low because this low is lower than this low, right? So lower high, lower low, lower than this low, and then this new lower high. Your entry is here, but I tell you guys all the time, look to the left, right? What confirmed our entry, right? Something that I talk about all the time. And you know what I'm saying? We don't necessarily like point it out, but this is why we entered at 61.8. When you have candlestick patterns, move this out my way. When you have candlestick patterns and you have confirmation to the left of where you want to enter the market, then you should have no worries when you enter that trade. Because for one, you have a nice someone tell me what this pattern is right here? I don't want to talk too much. I want to make sure y'all understand and know what's going on. But someone tell me what this candlestick pattern right here is called. I mean, the way that it created itself, I wouldn't even say it's a engulfing for real. Like,
Bearish
yeah, a bearish what?
golfing.
Bearish engulfing. It literally ate that candle. Like that blue candle formed, and then this red candle came through and just smoked it. It looked like it's 3 times as big as this candle, maybe even four, right? But not only is this a bearish engulfing candlestick pattern, this is also an order block, a bearish order block, which means that when market comes back to this area, that should sell off from there, right? So even with it being a bearish engulfing, a bearish order block, this is also something else that I call something that I like to see, something I talk about all the time. This is why I enter the market. And someone tell me what this is right here, what I just drew.
That's a fair value gap.
Come on now, talk to me. Right at your fair value gap, your 61.8 area, FVG. That's probably your best friend. Once you find FVGs at the area that you want to enter a trade, man, you better be confident to take that trade, place your stop loss above that structure that you need to place it. I personally would have placed my stop loss above here. I'm not gonna cap. I would have never placed it like right here. I mean, it depends, depending on what time frame I'm looking at, because I would have seen these rejections, then I would have been okay with placing it here. But safely, I would have probably placed it above this area to be more conservative, but more aggressive right below these wicks. But literally, this FVG, entering out this FVG, man, understanding that you're actually trading in the direction of the trend, that's really all you need, guys. Right? If you understand the overall trend of the market, and then you pay attention if you get in highs or lows, depending on your trend, all you need to do is figure out where your most recent high and your most recent low is, and then wait for market to give you the next piece of structure. Like, don't try to force it. Don't try to get in off of a retracement and say, well, I'm gonna buy it up until it goes back down. I'm gonna tell you how many times I done got cooked doing that. You know what I'm saying? And Mino talks to me about that all the time. Like Zay, just because, and I'm not gonna lie, sometimes I had to humble myself because he make a lot of sense, bro. He make a lot of sense when he say that. It's because like why waste my time trying to catch a retracement on a trade when I know the market is gonna come to me and deliver? Like if I already know, like if I wait for the retracement to happen and then once it happens, I can just enter the trade. I can be sitting in a trade peacefully, not worrying that I'm in a retracement. And the next thing you know, I'm expecting the market to come to the 61.8 and market only comes up to the 50% and I lose the trade. right? Because I'm trying to target a retracement. Like it's really hard to time a retracement, guys. I know that most people think they can do it. I'm one of those most people that think they can do it, but it's really hard trying to time a retracement. It's better to trade with the trend than against it. So that means if the market is going in the downtrend, why are you trying to take buys, small little buys? I'm not gonna lie, I'm starting to think swing trading is really a lot better than day trading. Like I'm slowly but surely it's starting to make more sense to me. Because for one, I don't have a lot of time to be trying to get little moves out of these trades. If I can literally say, man, I'm gonna wait till market come to my area and I'm not gonna get out until it gets to this low or creates a new low. Guys, do you understand like what type of move that is? That is a major move, right? This right here alone is a wonderful risk to reward. You know what I'm saying? And if we already down here, it's nothing for you to say, well, I ain't gonna necessarily say go break even because we ain't even, you know what I'm saying, 1 or 2 yet. I won't necessarily go say go break even. But literally just sitting here and allowing your trade to just play out, right? Bro say caught the entire move. He caught the entire move, bro. Like, and I'm pretty sure the move that he caught was literally this right here. Because yeah, this was the move that we actually got in this trade on. This is the move for right now. This is the right now move. But the previous move from Friday, this is it. This move right here, this high, this low, this lower high, that is the entry. I'm pretty sure we entered this market literally right here somewhere. I'm not gonna lie, I feel like we entered it right here, and then he kind of retraced up a little bit and then dumped down. Yep, as y'all can see, Friday market shot it right here, closed right here, and then when the market opened on Sunday, went straight down. I say it went straight down. You see what I'm saying? So, and some people might even some people might even close that bad boy before, once market starts shooting up, got scared and got out of the trade. You know what I'm saying? If you did take it, you know what I'm saying? Some people might have closed on and said, man, this shit about to go the opposite direction. And it closed like this, and then as soon as the market opened, it gapped. It literally gapped. Gap started trading down and went straight to take profit. I'm talking about with the quickness, right? With the quickness. All right. And then now we got a nice little CPI or a nice little news that gave us a new lower high, right? So we could have literally got an entry right here and take it on down. But I'm not gonna count. Like I'm just not going. I'm waiting for market to come back and retrace a little bit. I want to see if we can get a nice little retracement back up, so where we could potentially get into this trade. I would love to see gold, and I don't know who's probably in gold right now, so I don't want to jinx your trade or anything, but I would love to see market come back into this area, maybe touch this trend line again, or you know what I'm saying, give us something, or just give us a nice little, you know, little lower highs or something that we can go ahead and sweep that liquidity and potentially get us in that trade so we can actually take it down. You know what I'm saying? That's what I would like to see. Like I would love for us to be able to get into this trade. So for now, right, I honestly don't see a break of structure just yet, according to, well, take that back. Take that back. Yeah, I think we got to break stuff. Anyways, I want to see a nice retracement before I can actually get into this sale. I don't want to sell it here. Even if market do go straight down, I don't really care because I know if I enter this trade, I'm gonna have a sorry risk to reward, and that's not the way that we trade, right? I know if I enter here, I'm literally targeting this area because I don't know if market's gonna create a new low, but I know for sure I have a higher probability of market creating an equal low, and that just doesn't make sense for me to enter now, right? So I'm okay with being patient and waiting, and hopefully market come back to this area, so that way I can have a better risk to reward, and I feel a lot more comfortable taking this trade. You see what I'm saying? So, any questions about gold so far? New rate session. Okay, cool, cool, cool. I'm gonna set an alert. I'm gonna set an alert on this bad boy because I would love to see market come and test this bearish engulfing. So I'm gonna set an alert to be looking to get up in there. So price crossing up. Um, change the message. So gold testing. Um, bearish engulfing. Look for sale entry. All right, that's an alert right there. Turn red, please. Okay, cool. So alert has been set. So it's pretty much gonna let me know when the market get there. And like I said, like I would love to have gotten into this trade up here, you know what I'm saying, but missed it. But that doesn't mean just because we missed it, we won't get another opportunity. Market loves giving opportunities, especially gold. So what we can just really just do is be mindful and just pay attention to what market is trying to do. I also see a nice FBG. I see two FBGs, honestly, and my chart kind of tells me where they are. In this case right here, we have a nice little FBG right here, and then market also created another one right here in this case. But I don't really care to get into those. I want to see market retrace a little bit higher because I know that this is my true lower high now, and these is nothing but liquidity. So I'm not even about to even get caught up in that. So what I want to see is market come closer to this area, and I can place my stop loss above these wicks. Hopefully, you know what I'm saying, I can get market to even come it's up into this area even higher potentially. You know, because I still see a little bit of green right here that we didn't test. Don't mean we will test it, but I'm not gonna be too greedy and try to say, oh, I want market to come all the way up here because then I'm breaking trend line and I might be breaking structure next. So I don't want to get up into that. I want to see market reject this trend line because this is resistance. This is diagonal resistance. So I want to see market reject that and drop low. But this is what I'm looking for. Market to retrace back into this FBG, but a little bit higher to that bullish that bearish order block or that bearish fair value gap. Not well, bearish fair value gap, bearish order block, bearish engulfing. It's a lot of different names. You really don't want to confuse yourself with too many, but this is my confirmation of entry. Those type of things I'm looking for. But yeah, any questions about gold? Yeah, no, sir. Perfect. All right, cool, 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 cool. Let's see. How y'all feeling so far? Anything that I talked about, because like I said, this applies to anything, like not just gold. This applies to GBP, USD, Euro USD, USD JPY, CAD JPY, Euro NZD, GBP, every currency pair. It applies to every single thing. All right, not just one thing. And that's the beauty about our strategy, man. We can use this for anything. Yeah, I saw that. I saw I could trace sugar on one of my platforms. I was on Match Trader, and they said I could trade sugar. And I'm like, damn, I can put the strategy on that and trade sugar, but I don't know how sugar moves, and I don't even think I'm gonna trade no sugar or nothing like that. But I'm just letting y'all know, like this literally works for everything. But no questions, y'all good? Y'all straight? And am I confusing anybody? Anything not really clicking, not clear to y'all? Okay, Ahmed said he's straight,
Nah,
he
can I
good.
can I ask you something?
Absolutely.
All right, so with uh case to the line, but like towards like the consistent high candlesticks, like how they consistent side by side, that's an indication of the market going down, driving down, and vice
Uh,
versa.
so those candlesticks are side by side like that. Those are like candlestick patterns that the market creates. Basically, the institution kind of creates. Those are the areas that they look to enter the trades off of. At the highest points
Gotcha,
or the lowest points.
gotcha.
Yep. And
Okay.
that's kind of like what you really want to target. Once you start like trading like a institutional trader, they don't really
Uh-huh.
trade inside of this like little stuff right here. These are like where let me delete some stuff so you can kind of get a gist of what I'm talking about. Most retail traders, they're trading inside of moves like this. They trade inside the moves that are already happened. The institutional traders trade on the outside. So basically they're not looking to take no sales right here in this area. That's what retail traders are doing, taking sales in this area. So the institutional traders are smart enough to say, if they're taking trades in this area, let's just go ahead and kick their ass out, and let's actually take the sales at the highest point, right?
Gotcha. I get what you're saying. Yeah, I got
Yeah. So even at the bottom, like at the bottom, they're not gonna buy. They're not gonna buy. Um, they're looking to buy at the lowest points. You know what I'm saying? Like pretty much somewhere like down in this area after it creates a new low. All right, that's the reason why you see market go back up, right? Because all the orders have been taken and everybody gonna close out their sales. Now pushing the market back up now because we market just can't go straight down. You know what I'm saying? It has to retrace back where it kind of broke out from. And we all
you.
know
Correct.
that we have a low, lower high, lower low. Next thing we should get is a lower high. And they want to buy, I mean they want to sell at the highest points. Right.
Gotcha.
So yeah. Like I said,
I
like
see.
yes.
Sorry, just I kind of joined late, so I wasn't sure, but I'm just looking at this chart right now. I'm just wondering why all the market structures and everything is drawn on the 1 hour chart instead of the daily chart. That's just my question.
Okay, so
I just get a bit confused with that. Like the market structure should be on the daily chart, but most times it's always on the 1 hour chart.
yeah, so the market structure. So basically, on the daily time frame, what you want to focus on is your daily high, your daily low, and your daily trend, right? Because if you focus on structure on the daily, well, focus we do focus on structure on the daily, but as far as our entries, we get our entries off of the 1 hour, right? Because swing traders trade off the one entry off the 1 hour, 4 hours for uh your structure, and then the daily for like your overall like trend bias or also structure. I really like if I'm go back to the daily so you can see because I kind of went off the daily first. I started at the daily and then I went down to the 4 and then that went down to the hour. Um, but this is what I mean, like based off the daily trend, right? We went from here, right? Because we saw the market was pretty much going up. So we started here, and then we can see how this no longer is giving us higher highs and higher lows. We now getting lower highs and lower lows. Okay. And then based off of market creating this lower high and then this lower low, we ended up realizing that, oh snap, the trend has now changed from an uptrend to a downward trend. And this could be temporarily. That doesn't mean that it's long term. Because just like market change from going in the uptrend, market can change from going in a downward trend right back to an uptrend, right? So don't think it's just going to continue to go all the way down here. Like we don't know that, right? But for the moment, right, we can see that market is now giving us lower highs and lower lows. So market has been going downward. So based off of that, I have the daily structure here. I have this daily high, this daily low, this daily high, this daily low, this daily high, this daily low, this daily high. And you know what I'm saying? And we have this little higher low. In this case, that's kind of where it's sitting at. But that doesn't mean that market is not going to give us a equal low or a new daily low because we are trending downward. Now we can kind of see how market gives us a nice downward movement, a little up movement, downward movement, consolidation, and then drop down with a nice little downward movement, upward movement, downward movement, upward movement, and then we get probably like a little bit of consolidation in this case because we started getting a little choppy right here, I'm not gonna lie. And then we should see market start giving us a little bit more downward movement. But if market decides to push up, we need to start breaking this structure right here to confirm that we are now going in a bullish trend, right? So we basically did go a structure off the daily. It's just that we went from daily 4 hour to 1 hour because daily is the overall trend, overall structure. 4 hour, right, kind of gets you in an understanding of okay, based off my trend, let's look at structure in a more uh like in a magnifying glass in a way, right? Because the daily kind of gave us like structure that is kind of far off. You know what I'm saying? So now we go 4 hour and we can see, okay, these moves that we see from the daily, we have high, low, lower high, lower low, lower high. Okay, and then the 1 hour is where we actually enter in our trade, but our entry and our take profit and our stop loss and all that is based off of the higher time frame. Like this is more of like a quicker move compared to doing it off of from here to here. And then this retracement, you look for market to come all the way down here. So this is kind of like more of a position type trader, but a swing trader either way is from someone who takes a trade from one swing high to one swing low. So basically we're going from swing high, swing low, swing high, and then we're going to take out another swing low. So we're still swinging this trade. It's just that we're doing it off the 1 hour for our entries. Now, if you're entering trades off the daily, then understand that you're probably going to be doing more of a monthly structure, more monthly trend, weekly structure, and then the daily for actual entry. And that's the one who's I'll say like a position trader, someone who holds trades for days, not even days, but months and years. And I don't think I'm that type of trader. I don't think I'll ever be that type of trader. I don't know. I get a lot of money and I start holding trades like that, then I mean it is what it is. But holding trades for years, I ain't got to that point just yet. I don't know any too many people that have been holding trades for years, unless you're kind of like doing stocks or something like that. But we do go with the daily time frame. We just go from top to bottom, right? You got to go top bottom when you're looking to get into a trade. Hope that kind of answers your question though.
Yes, it does. Thank you.
Awesome. Someone said I am actually in a sale from the rectangle block. Where would you look to take TP for this sale after CPI? So, I mean, me personally, bro, you gotta understand. Well, wait, let me make sure I'm talking to. Okay, so yeah, so you basically gotta understand like we already got the fear. We got the fear from this high to this low, right? And then we're looking for that retracement that's already happened here. Like it's only two areas that I'm looking to take profit, right? And I think everyone should kind of know that already. Who knows? What's the first area that I'll probably be looking to take profit? Who knows?
In the zero from the Fibonacci,
So which level will be my first take profit?
in the lower high, no lower low down,
hmm So my
where the
what
zero,
percent?
where the zero is.
Yep.
Here,
What?
yeah, yeah, there,
Yep.
yes.
0%.
For
So
the
that'd
first
be my
TP and the second TP,
second
yeah,
TP is
and the
what?
second TP minus 27%,
Let's go. That's it.
minus 27%.
You heard her. You heard the queen speak. The 0% is first take profit. Second take profit is negative 27. Guys, the system is so freaking easy. So your entry should be near the 61.8. You know your stop loss should be a little bit above the 78.6. You know your take profits are the 0% or negative 27, right? But when you comes to your entry, you got to know, why am I entering at this area? What has happened already for me to take this entry, right? That's what you got to ask yourself. That's what you got to ask yourself. So right here, you see that you have this high, this low, this lower high, this lower low. You know, market got to give you another lower high, right? But this is your overall high. This is your overall low. This is internal liquidity, internal lower high. So why not market just go ahead and sweep that area and then go in your direction? Because let's be real here. Let's be real honest here. Most traders that do not wait on liquidity, which can be me sometimes, I'll admit it. What can be me sometimes, I'll literally get in the trade and I'm like, yo, I'm gonna enter at the 61.8. Well, first and foremost, you know what I'm saying? Let's say I say I'm going based off of this right here. And I say, I'm gonna enter right at the 61.8, bro. I'm gonna enter at the 61.8, bro, and I'm gonna place my stop loss right above this lower high right here. And I'm gonna hold my trade to 0% and I'm good. As soon as let's be real, right? Let's be real here. Soon as that happens, most traders like, oh snap, market came to my entry. I'm about to get in. Wait. No, no. Here we go. This more like it. Most people say, all right, bet. I got this high. I got this low, right? I wait for market to come right to my 61.8 because I got a good area where I can place my stop loss right above this area right here. Matter of fact, I'm gonna place it above the 78.6 just to be safe. But I'm gonna place it right above here. This is where I want to place it above, y'all. So I'm gonna enter here, right? And let's say I got a nice 1 to 3 risk to reward, and you take your trade and you got stopped out. You're like, bro, what the fuck? I got stopped out of my trade and market still went in my direction. Why did we get stopped out, guys? What did we not wait for?
Liquidity.
I
Liquidity.
got it. I got it, man. Totally understand the process.
Let's get it.
Uh, yeah, I just have one more question though.
Mhm.
So we see here the USD is going down, so the gold is going down. I see it's going like very, very nicely and everything is going fine. Why does Euro USD is going up? Is it just retracing? Is it just checking the previous levels? Like what's going on with it?
Let's look. Look like the same instance to me. You got to think about it too. Gold is different from Euro USD. I know that they both have the US dollar in it, but just because one currency might be going down doesn't mean the other currency is, which it kind of should because they have the same correlation in a way. But you got to think about it. Certain things drive gold compared to driving the Euro US dollar. You know what I'm saying? Like gold is like a what they call it? Uh, Um, what they call that thing? Between the dollar
Uh,
and gold is like a I forgot. I
Safe
forgot.
haven, safe
Yes,
haven.
yes, yes. That's the word I'm looking for.
Yeah,
So I'm not sure exactly how it goes. I don't know if Hans is up here. I know he can explain it, or Mino might be able to explain it. But when there's fear on war and stuff going on, man, people take their money out of, you know what I'm saying? They put more money towards like gold and stuff like that, and don't really rely on the US dollar because
the
it's more.
currencies and all. I
Yeah,
see.
yeah, so whatever's going on with euro might be a little bit different, but I'm not even gonna lie,
Mm-hmm.
like it's pretty much doing the same thing as gold, if you ask me, because right here we have this true lower high, right, and
Yeah,
then lower low,
lower low,
and this
and
lower
the
high,
internal
and
break of
then
structure.
Yeah, yeah, yeah. So what happened kind of right here, in my opinion, is nothing but another liquidity sweep. Like if we go fear from this high and then drag it from this low, you possibly could still just have this nice little liquidity sweep, and market is just now retracing back into it looks like a fair value gap to me.
Fair value gap. I see that. I see that
Yep.
now.
To
I
where we
see
can
that now.
easily just wait. I'll say you can easily wait for market to come back below here, below
Mm-hmm.
your 61.8, and then let it give you
Mm-hmm.
a nice little lower high and then sell it off.
I'm
I think
already in a small sell here, so I'm just holding my position because I'm okay with my risk. So
okay,
I'm just gonna let it ride with a little negative, and then yeah, I can just go down and add entries. That's
okay.
what I see.
Perfect. So I would say if I had entered this or I was looking to enter this, basically wait on that liquidity sweep to happen. Market kind of
Uh huh.
gave you this nice little move right here. This would be
Yeah.
the area that I would probably looking to sell off in. So let's say if I was to sell right at the beginning of this fair value gap, which is probably right here, I probably be in a
Mm-hmm.
little bit of drawdown at the moment, which is fine. Stop
Yeah.
loss will be about 25 pips, and I'll probably go, you know what I'm saying, take profit to either here,
Mm-hmm.
but or right here. I would say whatever gives me a 1 to 3 from here. So
Right now, my entry was like 1.14449.
okay. So I would say something like this for me.
Yeah, that is what I was seeing it here. So
Okay.
I'm just a little bit. Yeah, I have already entered because I
Mhm.
saw that big candle moving down. That was my confirmation after the liquidity. But then yeah, I think it's retracing back and then might go down.
Because you already done got you already done got like an inverse fair value you got right here. When this move happened like this, when this happened and then market came
Yeah,
right back down, it gave you an
yeah.
inverse fair value gap and then it just
Hmm.
traced back in here. So really, which I mean, me honestly, bro, I would literally say you kind of did this the right way. Like however this trade plays out, you got to understand like losses are going to happen.
Yeah, yeah.
But you did everything right on this trade. I would have done the same thing. I would
Sounds
have done
good, boss.
the same
That's what I
thing.
wanted to know. Thank you,
Abs-
man. Thank you so much.
Absolutely, bro. Absolutely. Like and guys, what I literally was just talking to him about is literally like market literally gave like consolidation here, but then you can see the lower high, the lower low, the lower high, the lower low. Nice liquidity sweep, in my opinion, right? And then it gave you a nice little push back down, like a little higher low in this case. And then like and right here, we really just would like to see a lower high happen so we can, you know what I'm saying, feel comfortable about this trade. But I'm not gonna lie, everything that he did, nothing was wrong with what he did. I just need everybody to really understand that you cannot win every trade. That's just how it happens, right? You can do everything right, and the trades still go the opposite direction. Like even selling off of right here at this 61.8 right here, this is correct. Like nothing wrong with this at all, right? From this high to this low, right? It don't get no better than that, y'all. And we just have to understand and accept the fact that we will not win every single trade, but what we will do is use proper risk management when we take a trade. That way, the losses don't hurt as bad because they're gonna happen. But literally, just based off of this move right here, you have, let me show y'all, so y'all can know. Even though this is back testing, you got the low here, the high here, the break of structure, the break of the trend line from this high to this low. Nice little retracement. Most people, oh, I'm gonna buy off this gap. You know what I'm saying? I'm gonna fill this gap. Yeah, fill that gap. Came right here, created a double top and drop. Right. But what you could have easily did was from this lower high to this lower low, wait for that 61.8 retracement. Once that 61.8 retracement happen, right, you got the liquidity sweep. All right, bet. We just got a liquidity sweep. You know what I'm saying? So from there, after that liquidity sweep, market close like that, you can go ahead and enter your trade, right? Enter your trade, place your stop loss right above where it's what liquidity, just to be safe. Let's say you go 15 pip. And that's why I say like sometimes you can have smaller stop losses when you actually get the right entry, right? And then based off of this, right, depending on what type of trade, because this is the 1 hour. So if you went out the 1 hour, um, it'd be a quick little trade. But based off of this right here, right, you can go to I'd say 1 to 3, probably your best bet, just to be safe. So a nice little 1 to 3, basically 0%. And then look, you hit take profit. And then after take profit got hit, what did market do? Swept liquidity again, right? Swept liquidity again. Still following this, did not break above here. So we still got this true high. We still got this low, right? And now market is kind of sitting to where it's in this area. So like I said, where he entered the trade, man, not a bad entry at all. I don't disagree. I like it. You know what I'm saying? But like I said, you can't win them all. But I think that's pretty solid. I would love to see this kind of close back below this area. close back below this area, bro, you about to cook, you about to eat. I ain't gonna lie to you. Close back below this area, close back below this trend line, man. You good as golden. I would love to see a
It
break right
sounds good,
above
man.
here.
Sounds good. Loved it, man.
Man,
Thank you so much for the answers. I might have to leave now, but yeah, that helped me, man. I learned it. Thank you so
you
much
good.
for clearing
You
it out.
good, man. You good. We already 7 minutes over, so I'm gonna see if y'all got any other questions. Cause like I said, I don't want to hold y'all long, but
See ya, brother.
um,
See ya,
see
guys.
you, man. Have a good night, man. Appreciate you popping on.
Bye.
Um, let's see. Anybody got any questions before we, you know what I'm saying, get up off of this call for the night? Any other questions? Do y'all feel like y'all learned a little something tonight? Need a little feedback. Let me know something. Good. All right, cool, 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 cool. So let me go ahead and stop the recording. I don't want that to be extremely long for no reason.